Here we go, guys. Okay, Acumulado Crypto here. Today, I'm gonna cover the basics of Elliot Waves, which is the framework that I use for most of my Bitcoin analysis and other cryptocurrencies analysis. Okay, we are gonna cover the Elliot impulse wave 1, 2, 3, 4, 5. Okay, so let's jump into it and see how it works. Okay, an impulse wave, it's something like this. Show wave, of course, it's gonna be easier to see, right? 1, 2, 3, 4, and then 5. Okay. You always have an impulse wave, then you have a correction, and an impulse wave, and then a correction, and an impulse wave, and then a correction. Okay, this is the basic structure of Elliot waves. You see that nothing can go up out of forever. It must correct, and that's the nature of the thing. Yes, we have some set of rules that we can use to enlighten our way of analyzing the chart, and then perhaps make better predictions. Yeah, that's one of the tools to make our perception of the charts better. Okay, it's one of the tools that you should add to your toolbox. Elliot waves. Okay, so here we have 1, 2, 3, 4, 5. Now, so some of the rules. Okay, first rule we have is the third wave. Oops. Third wave cannot be the shortest, and it is often the longest. Okay, guys, it's the most likely to be extended. Yes, what is this? So this wave here, okay, oh, we have a mistake here. This wave here, wave 3, is our wave that can't be the shortest. A is often the longest. It's the most likely to be extended, to really go higher in price. Okay, this is the wave that all the traders look for to enter. They are always keen to enter in wave 3, in wave 2, to get this huge movement upwards. Okay, this huge price movement upwards. Okay, third wave cannot be the shortest. Okay, wave 1 and wave 2, wave 1 and wave 4. Wave 4 cannot retrace by more than a week into the region of wave 1. Okay, so we have here this retracement, don't we? Oh, I'm sorry. A third wave. So here we have some grammar lessons as well, huh? Why not? A third wave cannot be the shortest. Week into the region of wave 1, I'm sorry. So this is what I'm talking about. Wave 4 can't retrace to deeper, lower prices than wave 1. It can, however, in leverage markets like Bitcoin, but just by a week. So if we have here the price, we would see something like a really small wick, something like this, piercing through the region of wave 1, but not staying here a lot of time. Okay, this is another important rule. Okay, wave 4, the relationship between wave 4 and wave 1. Okay, so, and what about the retracements? You have the wave 1. After wave 1 finishes, we have a wave 2. We are gonna have a ABC, 3 waves pattern inside of wave 2, but I'm not gonna cover ABC correction pattern, this thing here now. Okay, ABC correction wave. Okay, this is what we have here. I'm not gonna cover, not yet. Okay, I'm not gonna talk about it, not now. Next video. I'm gonna just use our fib retracement. Okay, here I start at the beginning of wave 1 and I pull all the way to the top of wave 1, and then we have the retracement. Wave 2 usually retraces to 50% at least, and it is often the best way, the best spot to retrace this region here, 618, 65%. It can retrace more. It can retrace to 78, 60%. It can retrace 80, 87%. Okay, otherwise, if it retraces more than 100%, it's gonna invalidate it. Okay, then we call it, this is not a valid retracement. We can't count it. We can't count it as 1 and 2. Okay, what is normally happening in Bitcoin is that we are retracing a lot. Waves 2 are quite deep, like 80, 70%. Okay, it has happened quite a lot, I would say. Okay, so we must pay attention to this region here, 6180, 65%. This is the region here. I will mark with a box, with a rectangle, sorry. This is a region. Okay, and I would say this is the region that wave 2 retraces. Okay, then as I said, we have our wave 3. If we use our fib extension, we will get the beginning of wave 1 to the top of wave 1, and we would project wave 2. We would have the common spot for wave 3 is 161.8, 175 of wave 1. Okay, this region here. Okay, so it can, of course, as it is the most likely wave to extend, it can go really high like this. Okay, but it's a common spot is this region here. So this wave here is 65, 618, 65% more than wave 1. Okay, this is 100. If we go here, wave 1, this wave here is the same length that we have here for wave 1. Okay, but in this case we have 175% as our preferred spot for wave 3. Then we have another retracement, another correction, okay, which is wave 4. Wave 4 usually corrects a bit less than wave 2. What is the common spot for wave? Let me close this one. What is the common spot for wave 4 to correct? 50%, 30-80%. Okay, and we see that wave 4 is often like flatter. Okay, it's not so sharp as wave 2, but flatter. Okay, sometimes takes longer times to correct wave 4. Okay, but the common spot, the common place to correct is 38-20% or 50%. This region here. Okay, I will mark it here. this region here. Okay. Then we have our wave 5. In this case here, wave 5 can be longer than wave 3, okay? Because wave 3 is longer than wave 1. So we often see in cryptocurrencies that wave 5 is longer than wave 3, okay? But wave 3 is longer than wave 1, so this rule here is not broken, okay? This wave 3 cannot be the shortest, but it can be shorter than wave 5. So here we have wave 5. It can be short. It can be longer than wave 3, okay? Again, if we use our fib extension from 2 to 3, projecting to wave 4, here we have, if you want our wave 5 to be 100% of our wave 3, this is what we would have, okay? If we want our wave 5 to be 100% of 127% of our wave 3, here is the spot, here's the place, okay? It can be 261, 80%, okay, of our wave 3, okay? So 100% is here. 127, 20%. It can be, it can extend. This wave 5 can extend. It's not a problem, okay? So let's apply this set of rules, this framework to one real chart, right? That's why we are studying this. That's why we would like to learn this framework, to apply it, right? That's why we learn how to use it. Okay, so here we have Ethereum dollar 1 day logarithmic. Okay, I prefer. See, if we use arithmetic, we don't see a lot of data. Here is the logarithmic. Let's just put those rules here. Not so easy to spot the initial. Here we have this beginning of this data here. We can't really understand what was happening here, because it was like when it first starts selling at the exchange, what usually happens is that they dump it. Okay, so then we see this parabolic dump. So here we will start our wave 1. Okay, if we will start this as our wave 1, what is the wave 2? I would say here. Okay, wave 2, 3, 4, and then our wave 5. Okay. It is arbitrary. No, I have a bit of experience doing this, using this framework, using this theory, so that I can spot where is the best places to put my wave 1, 2, 3, 4, and 5. Then we should start using the measurements, okay? That's how we see if we are right or not, okay? Let's see here how much this wave 2 retraced. Okay, I zoom in. This is our wave 1. In our wave 2, oh Bruno, this is like, this has retraced like nothing, 30, 80, 20%. Yes, it's not impossible, okay guys, especially in crypto. Wave 2 can be shorter, can correct just a little bit. So in this case it has correct almost nothing. Okay, almost just 23%. Okay, it was a really fast and sharp correction. But then we have the relationship between wave 2 and wave 4. Okay, we see here the extended wave is wave 3. Oh, a really long and parabolic wave 3. Okay, Then we have a retracement. You see, we have this correction for wave 4. And what is interesting is that wave 4 has corrected more than wave 2. And we have this relationship between wave 2 and wave 4. When wave 2 is really deep, like this, and takes a lot of time, takes a rather good amount of time, what we usually see is that wave 4 is shorter in time and not so deep, okay? But when we see that wave 2 is shallow, what ensues after that is that wave 4 is going to be deeper, okay? That's the relationship between wave 2 and wave 4. So in this case, for example, we have that wave 4 has retraced to the belly pocket, 618, 65%. Okay, has retraced to this, but has pierced through the 50%. See, which is really weird, right? Oh, haven't you said that the best spot for us to consider a wave 4 is 30, 80, 20%, 50%? Yes, I have, but like I said, in cryptos, we have plenty of room to have plenty of different specific rules, specific caveats when we apply the rules. Okay, in this case, for instance, we don't have a perfect spot. Wave 4, like I said, extended. The correction was deeper than wave 2, so it's okay, right? And wave 3 is the longest, so it's perfect. It's within the framework that we're using. That's what is important, okay? And wave 5 is shorter than wave 3, okay? Here we have this shape. The shape is not perfect. The shape is not a really beautiful 1, 2, 3, 4, 5. Oh my God, I'm really that bad. Like these, right? A beautiful, right? A beautiful 1, 2, 3, 4, 5. We don't have this in real life. We have this weird shaped wave 5. Weird shape 1, 2, 3, 4, 5. Okay, guys. So this is the basic of Elliot wave, impulse wave 1, 2, 3, 4, 5. Okay, this is the basic. What I would like to add is that inside of each of these impulse waves, we have 5 waves. Okay, that's the fractal-like nature of Elliot waves. Okay, here if you want to count inside of wave 3, okay, 1, 2, I would say this is a 3, 4, 5. In this case, 5 would be the longest, okay? But 3 is not shorter than wave 1, okay? Here. Why Bruno? Why Akuma? Why is this wave 4? Because of the shape, you see? It's this correction here tells me that this is wave 4. It took a little bit more. It took a little bit of time to correct, and here we have again a wave 2 that is really shallow, and a wave 4 that's deeper. So I'm following the higher degree waves. Okay, I'm following this higher degree. Inside of this higher degree wave, we have a 1, 2, 3, 4, 5 waves, impulse wave structure that is following the same. You see, if you compare this structure with this one, with this white one, it's not that different, right? Of course, wave 3 is shorter than wave 5 in this case, but it's not shorter than wave 1. Okay, let's measure it just to see if I'm right. Okay, to measure it's the wave 3 is 300% of wave 1. Okay, so it's not, it's a really long wave 3 and a correction of a rather deep correction for the wave 4, and then a really extended wave 5 here. Okay, so, and inside of wave 1 we have 1, 2, 3, 4, 5, and inside of wave 4 to wave 5 we have a 1, 2, 3, 4, 5, the same thing. Okay, waves within waves within waves within waves. Okay, this is okay, again 1, 2, 3 is the longest, 4, 5. Okay, impulse waves. You can change the label. I'm sorry, the label of the Elliot Waves. You can change the label to make it easier to read, and of course, why do we have this degree here? Because waves that are outside of the waves that are taking longer, talking about the time, the length of time that it's spent going on, like this wave 1, 2, 3, 4, 5, this wave, this white one here, it's a higher degree than those inside of it. So you have a hierarchical structure, and then you need to change it here. Okay, you have the super millennium to minuscule. So super millennium would be the first wave that has ever happened, and then this first wave would have 5 millenniums, 5 submillennials within it, and then we would go all the way down until you find the minuscule, the waves that compose it. It's 5 waves within 5 waves within 5 waves, the fractal nature. Okay, of course we can't see this perfectly here. We would need to go down a little bit and make the hell out of it, because it would make, like, when we change the time frame, the things start to fall apart a little bit. We need to redraw some things and reconsider some things. 1, 2, 3 is 1, 2, 3, 4, 5. We need to dig into these counts here to see if we have 5 ways, but for me it's pretty damn clear that it is. Okay, so waves within waves, and the rules and the retracements. Okay, that's how we use this framework for corrections. The wave 2, the wave the wave 2 preferred spot to correct is between 618 and 65%. However, then maybe it is often seen shallow or deep waves too in cryptocurrencies. Okay, it's often seen. Oh, I'm sorry. It is often seen. No, sorry, it's wrong. Yes, it's often. It It's often seen shallow or deep waves too in cryptocurrencies. All together, Bruno. Yes, and then we have the wave for preferred spot to correct is between 30 to 80%, oops, and 50%. Taking, bear in mind though, bear in mind though, the relationship between wave 2 correction and 4 correction and wave 4 correction. Okay, and wave 4 correction. Yes, the wave 4 preferred spot was between 30 to 80 and 50%. Bear in mind the relationship between wave 2 correction and wave 4. Okay, between wave 2 and wave 4 corrective patterns. Between wave 2 and wave 4 correlational corrective aspect. Okay, here we have one more space, so aspects, yes, because we're talking. So okay, this is, I'm sorry to be stopping so much. I need to think to try to keep it simple. I need to formulate my ideas. It's not really easy to explain this framework, to explain this theory. I hope that I have had a good job. I'm gonna try to keep improving it as we move forward and add more to this framework and add more. We have plenty of things to add, plenty of caveats, different anomalies. I don't like to use this word, but we need to be really open to different. We need to be open to possibilities when using Elliot Waves. Okay, we need to be constantly changing our accounts. We need to be responsive to the market. Okay, not be so loyal to our idea of the ideal count. Okay, oh, I have this count. I won't pay attention to anything else. I will just focus on my count. This is wrong. Okay, this is you're gonna fail if you do so. This is one way of analyzing the chart. Okay, I hope that you guys have enjoyed it, and I hope to be doing the same thing over and over, and I hope to be giving to the community my help, to offer the community my help. Okay, thank you very much, and we see each other in the next video. Bye.